Hello everyone, how are you all doing out there? I'm Kate Hill, bringing you the best and unbiased and honest content on property, along with fantastic hints and tips. Today, let's have a look at why building new property in growth areas is a very smart investment for 2025 and beyond. If you are thinking about investing in property this year, you've probably heard about growth areas. I talk about them all the time, but what exactly is it? Why is it such a hot topic in real estate world? Growth areas are suburbs or regions experiencing rapid expansions due to factors like government investment, population growth, increasing infrastructure development. Now, clever investors, they know that buying in a high growth suburb or area can be a game changer. Not only do these areas offer excellent long-term appreciation, but they also provide really attractive rental returns, government incentives, and a steady stream of future buyers. So what makes these areas so appealing? Let's have a little look at it. Government infrastructure spending and its impact on property values. One of the biggest advantages of investing in a growth area is that government-backed infrastructure projects fuel property value appreciation. New roads, rail, public transport enhancements. Governments love pouring money into high growth corridors, meaning better roads, new train stations, and improved public transport links. These projects make the area more accessible, desirable, leading to higher demand for housing. Schools, hospitals, and public services driving demand. New schools, medical facilities and shopping centres make life easier for residents. If a suburb or location is getting a brand new hospital or university campus, then expect a surge in demand and rising property values to match. A really simple rule of real estate investing is follow the people. With caution, of course. The role of internal migration. People are constantly moving from expensive inner city locations to more affordable growth areas. With housing affordability concerns at an all-time high, families, young professionals, retirees are all looking for modern, well-located homes at a fraction of city prices. Why? First home buyers love growth areas. Many first home buyers are flocking to these suburbs and locations because they offer larger blocks, new homes, and government incentives such as stamp duty exemptions or first homeowner grants. This does make it easier for investors to find tenants and secure consistent rental income. Long-term capital growth potential. When investing in property, you don't just want short-term gains, you want long-term wealth accumulation. Property value appreciation over time. Growth areas are like sleeping giants. They might start with lower property prices, but as infrastructure improves and the population grows, so does demand, pushing prices higher. The role of supply and demand in pricing. Many growth areas have a limited supply of land, meaning as more people move in, prices naturally increase. Investors who get in early can ride that wave of capital growth before an area becomes too expensive. Now, I'm also going to be answering some FAQs on this one. These are questions that we get all the time, so I really hope that it's helpful. Okay, so what makes a growth area different from other suburbs? Growth areas have a higher population growth, often major government investment, and an increasing demand for housing. So these suburbs often receive new infrastructure, like I've said, roads, schools, transport, making them really attractive for investors. And the next one, are new build properties in growth area better than established ones? So new build properties often come with lower maintenance costs, higher depreciation benefits and stamp duty savings, plus they are more attractive to tenants. So thanks to modern designs and energy efficiency, but of course you've got to be careful about your location. And number 3, how can I identify a high potential growth area? Well, look for suburbs with strong government infrastructure projects, increasing population figures. I'm just going to be repeating, aren't I? And rising property prices. Areas with planned transport hubs, hospitals, shopping precincts, they tend to see solid long-term growth. Number 4, is investing in a growth area risky? All investments carry some risk, but growth areas would generally be considered lower risk if researched properly. Key factors like jobs growth, transport accessibility, and demand for housing obviously help minimise that risk. And finally, what government incentives are available for new builds in growth areas? So investors can benefit from stamp duty exemptions, first homeowner grants, increased tax depreciation claims. There's lots of incentives that make new builds more financially attractive compared to established homes if you get the location right. So really some final thoughts that I'd have on these growth areas. It's not just about short-term rental yields, it's about future-proofing your investment portfolio with massive government spending, skyrocketing population growth, long-term capital appreciation. These areas can be a goldmine for investors willing to do their research and act quite quickly. So what's next? We're going to look at stamp duty savings, one of the biggest perks of buying in a new area. In the meantime, I will keep you posted on all things property from around Australia as our year progresses. Don't forget to hit like and subscribe, and I will see you all really soon. Bye.